This is the Bank Nifty daily charts. You can see that the market was potentially working towards getting a W pattern, and it went down, up, down, and up. But yesterday, it created a kind of doji candle which can lead to some amount of confusion. This is the 15-minute chart. You can see that the market was trading in its zone that we had thought for most of the day. Essentially, we ended up getting some decay, and by about 1 o'clock we ended up closing, and the reason being that the market opened up, and over here we waited to see if there was going to be a breakout or a follow through, and since it didn't happen, I ended up selling some calls over here, directional moves, and ended up getting some profit over here and exiting. Then over here essentially was thinking that the market has come down, bounced back, should be able to make another directional move upwards, and essentially for a while it stayed there, and eventually the stop loss was hit around 12. And at 12, what I noticed was, if I draw a trend line, you can see that the market was starting to move downwards, unable to make a recovery. So essentially we thought that the market will stay range bound if it's unable to start breaking highs, say this candle high, this swing high. If it's unable to sustain and break that to come up here to take resistance and come down, then the market may look slightly weak, and essentially by about 1 o'clock we ended up closing positions. When we closed positions for all the accounts, the straddle was 420 or so, right? Eventually the straddle price closed at around 360, but there's this big swing that happened in the last hour of trading. So our plan for today, now even though today we may not trade, right, the objective is, if we were to trade, what would happen, right? So one of the things we would definitely look at is this high as an option. The other one is this swing low. And we can see that there is this level in which the market was really sort of struggling to kind of break through. So this 35,200 level might be an interesting level in order to see if there's a swing, because from here the market actually fell, and here we've got some resistance. So I would do around 35,200. On the support side, we can see that there is a swing low that is here around 940 or so. Yeah, we can see that 950 levels. That level, or yesterday's low to be on the safer side, is going to be a level that we're going to keep an eye out for. This is no longer valid. So these are levels that we're going to keep an eye out to try and figure out where the market opens. Now, as I'm trading or making this video, it's 7:30 in the morning, so the SGS index looks slightly up. The market may be poised to open upwards. The other sign that I was seeing another YouTube video right now from someone else, they were like, if the market starts moving up and then breaks down, essentially there can be another swing all the way to about 34,700 odd levels, which is kind of where we have a zone. So the first hour of trading is going to be critical to see where the market actually opens, what is the price action that happens in order for anyone to trade. Now for us, we're grateful that we've closed our books in profit. We've ended the year in profit, calendar year. We still have 3 months left. Um, Today there may be one or two trades that we may take depending on what the IVs are, but by and large our objective is to test theories, make sure that the market is moving there. We're sharpening our skills so we can continuously build positions and end following weeks in profit.